Welcome to TradeTheMBI.com. This is Jonas Reports for the 19th of January. And coming off that dip to the ABM green, we got the pushback as we saw shorts completely exited once we came back down to that point. It was just a matter of filling, and that just encouraged a lot of buyers. We saw the beginnings of it with the steel rising. Even though we had the spread, we weren't looking for a whole lot, but that cave of DOC orange mimicked what we saw from the short situation with the MBI readings, and the magenta crossing back over was enough to just push things back. And once you got back over the ABM magenta there at the 76 range, continued to push, and now we're breaking back above the ABM gold here, yellow. The reality is above that, continue to be long below, and you can play for a little bit of short, but at this particular stage, a little bit stronger. And it was pretty evident from the intraday. It was a late day buy the other day that just started and didn't cease. From an NQ standpoint, you can see the power has been NASDAQ breaking into new high range for the year. So that becomes relatively important because it's been the driver for quite some time for the market, particularly over the ES, which if we go back and look real quick at the ES, is not even close to its 100 yet percent Morganacci line right there. And that's the difference in the effective power. From a treasury standpoint, again, traders realizing, that rates dipped a little bit too low, and they're moving back now more towards a reasonable level. They've filled this positive extreme, going right back to here. So that was a necessary thing given the exuberance and excitement that rates were going to zero. Oil making a decent bounce back. Close because we're at that 75 range. You move towards 80, and the picture starts to look very different from an inflationary standpoint, and all those dreams of zero rates start to fade quickly. That would definitely put additional pressure on the euro, as if there isn't already any rise in oil of a significant magnitude is going to drive the euro further south, simply because they have to exchange euros for dollars until such time as you're no longer trading oil in euros. From a gold standpoint, it recovered off of the deep dive, but still pretty negative from those readings. It's really trying to keep gold under wraps. And interestingly enough, after all the hype with the Bitcoin ETF situation and all that, again, we saw weakness coming through here with MBI White leading. And right at the 50%, that's always a dangerous sign off a clean DOC spread, and it propelled itself a little bit further. Also, a negative shakeout area. Didn't dip below the red line yet. If it's able to hold within that, that might be enough to do it, but pretty weak from a short-term buyer excitement. And you can see DOC red and that continuing to decline. So not exactly strength from that standpoint. And we talked about how ETH had been outperforming, still is. You look at the significant difference of Bitcoin now down near its 38%, and here you're still ETH above 61, between 76. So also facing the same DOC spread at this particular stage and the breakdown, but not as much short interest, no MBI weight excitement in that declines. Is just sort of one of those average easings, the way to refer to it as. And so once we had the dip coming back through, filling in that original breakout from all the way back here at the beginning of January. And once that happened, that encouraged new money to pop back in, and been nonstop since that point. We had the brief little breakdown right there, but that turnaround move was pretty clean coming off of that one. Intraday, you can see it. So we were kind of soft pre-market, a little bit of a pop, and then it faded back to clear out any last stops, and then the turnaround. And that drove things all the way through, and we're getting a continuation of that move here in the post-market. All clean and all up. So disaster has been staved off. Not that there was ever any disaster. This was just a question of filling back to a reasonable level within that range between the 176% and once that had been satisfied and just moving right back in the same direction. So not a whole lot has changed from that standpoint. We just still, keep an eye out for world conditions, anything changing in the oil front, and that would be significant. Unemployment numbers and that, despite their adjustments, looked good. So as far as things are going, the Fed is still on the high wire doing its job and staying balanced relatively and keeping things going. There's a lot of concern, but that's always the case. You always get the the fear trade that rises, and when everyone thinks that it's all going to hell in a handbasket, is usually a perfect opportunity for the market to rise under that pressure. And then when people realize it's a bit too late, they jump in and you get that blow off expansion. Then all the people who started earlier get out, and that's when you have difficulties. But not at this particular stage. As always, though, anything relevant, I'll put it on the Skype chat. Trade well.